So like I say for these videos all the time, people that are unfamiliar with these charts, it looks like there's a lot going on. There's not. A lot of this stuff is a repeated tool of just a different time period. Right here, the white and the gray is our profile of inventory. It's a little more unique than just inventory you might see on a ladder, because we're talking about not just newer inventory, but inventory that's moving up or aggressive if they're buyers, and moving down, and aggressive as sellers. They're gray if they're aggressive sellers, white if they're aggressive buyers. Now, here's the thing. If they move down, they're still buyers, but they're passive or they're less aggressive. All right. And I don't want to get too much into detail. What I do want to explain to people, and I could say this a million times, and every time it would be important. When you look at this number at the bottom, that's totaling up all the aggressive buyers, and this number here is totaling up all the aggressive sellers. Okay, the ratio is important. This number by itself is important. Like I just explained before I started this recording, is there's only so many buyers that are going to be available. Sure, you could find moments if there was something fundamentally that came down the wire that had insane bullishness to equity markets, and this number would get way bigger than it normally would in the regular ebb and flow and rotation of a normal day. But in a normal day, once it starts to get above 3,000, you have to start scratching your head as to, are you late buying it to get long? Because how many buyers are going to be behind you? That's what you need for a profitable long trade to be profitable. You need buyers willing to buy it after you at a higher price. That's what would make the price of that particular instrument go up. You need buyers. You need to know that. If you're long and you think price is going to continue to go up or go up, boy, you better have buyers come in after you. That's what this white is. Well, now it's 3,400. If you believe that there's a capacity of buying for anything, let's use homes, for example. There's only so many people that could buy a home. You can't just create robots that need homes and, okay, we've just doubled our buying capacity. If there's just not enough people from a demographic standpoint to buy homes, what are you going to do? There's a certain capacity to buy a particular product. That's why home builders obviously look out and build in areas that they know the demographic will create a demand. There'll actually be people that could facilitate the buyers. At some point, though, you run out of buyers, and there's a capacity for buyers and sellers. When it gets above 3,000 on this particular day, there's not a super magic number, but there's a number the longer you watch these markets that you could begin to say, wait a second, if I'm bearish, maybe I want to open a short, but if I'm bullish, I probably don't want to open a long, because I think I feel like I'm reaching and I'm late, not just because price rallied, but because this number is getting to capacity. All right. Now, it's not just sell it when you see it over 3,000 or 3,500, but take a look at the number across from it. Again, this is the amount of sellers that want to come in that might see prices get attractive, but they're not selling it. They're trying to sell it. People who do sell it, it's important to analyze what they're doing, but in a different way, a different silo, so to speak. With the people who want to sell it, but haven't yet, those, and that's what moves price lower. People's willingness to sell it, their attempts to sell it, but yet they haven't sold it yet. When you start thinking that way, you put yourself in a position to become better at predicting price. All traders, what we all try to do is predict price, the direction, short, medium, and long term, different time frames, different tools, but we're all trying to do the same thing, predict where price is going to go in the future, whether it's 2 seconds or 2 years. So you need sellers willing to sell it, but maybe haven't sold it yet. When you can compare that to something, you got to compare something to something else to find value. We wouldn't have nice looking people in this world if we didn't have ugly people. You have to compare two things in order to find value. So when you compare this number, which could be getting kind of high, capacity of buyers, to this number, which could be creeping up, but we're watching it looking for a clue, and then take the comparison or the ratio, you could see it jump at one particular moment. You could see it go from 3,500, let me back it up, to 500 roughly. And just a few beats later, it goes 3,000 to 1,100, and boom, it jumps pretty good. And it's not only even at this point, but it flips. And if you're looking for a fade or a short to play against, let's say the VWAP, which is up here, or any reason why you might want to get short, and you see it jump like this, and you're looking to fade this pop because you're looking for the price's direction to head south. Hopefully, you're looking for it to go down if you're getting short. This is the ratio you want to see go from a lot of buyers to not many sellers to even. If you could, and the quicker the jump, the better the clue. And the market does directionally head to the downside. This isn't, I'll just pull the best example and show it. This is up all the time. There are many people in our group that use it, some that don't. More people use it, the more, we kind of find good collaboration and attempts to say, I like that. I'll watch it. That's what makes a good community good. So the point of this video is to continue to march you down the path of understanding why price moves in the first place. Why price moves in the first place. Forget about all the other techniques, concepts, and tools that are out there, or learning to trade and invest. If you don't know why the thing you're predicting moves, you have no business predicting it. At its very core, its very basic level, you have to know what makes the price you're trying to predict, or the thing you're trying to predict, move, in this case, price. Why does it move? And most people who trade wouldn't answer that question accurately. Couldn't go deep on it, but couldn't even answer it accurately. And yet they're trying to predict it. So you have to understand that, number one, capacity. There's only going to be so much buying or so much selling available to buy or sell. Excuse me, anything. Number two, it's really difficult to find the value of anything unless you have the ability to compare it to something else. Ugly people, nice looking people. Appraisers do it with real estate since the beginning of real estate. What do they do to find value, to make sure the bank knows they're lending for something that's worth what they're lending it for? Correct? Appraisals, compare, contrast, comps. Well, how do you put yourself in a position, and what tools are you using that give you the capacity to find value? Because just because something is high in price doesn't mean it's expensive. And just because it's low in price doesn't mean it's cheap. That's where people get run over trying to pick bottoms or fade tops and sell tops, buy bottoms. They get caught in that all the time. And if you've traded long enough, so have we, so have I. Because you think, if you start thinking low price cheap, high price expensive, not always the case. It's when you get run over, whether it's a trend day or not. You know what I mean? So you think, well, it was, if I go a little deeper into this, it was trading down here. Well, now it's trading up here. So it must have been cheap there and expensive there. Well, now we could say that because we've seen it. But at the time, what if you thought we came down 10 points in this move? You don't see it's off the screen, but we had come down 10 points here. What if you thought this was going to look like this? Is this cheap? Hell no. Might be cheap tomorrow if we're 30 points higher than this price tomorrow. But at this particular moment, you're going to get run over thinking it's cheap just because it's lower. You know it's cheap here because you see it already had rallied. So you cannot trade necessarily with hindsight, but you could help understand how could you review what you're looking for to find the clues when in fact this could be, or have a high probability of looking like this when you're down here, though. When this could look like this and head south when you're up here. And I know everybody loves order flow or reads order flow. It's always been For a long time, the buzz phrase in trading, that in psychology. People think, I'm missing order flow, I'm missing psychology. I feel those two things, I'll be successful. Well, first of all, psychology, unless you know why price moves, psychology isn't going to help you. And unless you know what order flow really means in understanding how it describes why price moves, right? And buyers, sellers, with the capacity of buyers and sellers, long, shorts, too many longs, too many sellers, price is it's what's needed to send price lower. Too many shorts, too many buyers, too many buyers. It's kind of what's needed to send price higher. You got to be able to say those things like it's the back of your hand, and most people can't. And then most people wonder why many people fail or have a high failure rate. They don't even understand why and what moves what they're predicting.